Natural gas markets saw a brief rally in the early hours of Thursday but dropped sharply following the release of the EIA storage report. The short-term market reaction has shifted following a bearish EIA storage report, which showed a 55 billion cubic feet build, well above the forecasted 48 billion cubic feet. This larger-than-expected injection has dampened bullish momentum and may limit further upside in the near term. With the build exceeding expectations and aligning more closely with the 5-year average, the recent rally faces renewed pressure, especially if cooling demand continues to weaken under mild weather forecasts. Price direction remains highly sensitive to evolving weather models, particularly during the peak summer season when temperature-driven power demand plays a dominant role. Meanwhile, U.S. dry gas production remains steady at approximately 107 billion cubic feet per day, showing a 3.7% increase year-over-year. LNG export activity is gaining momentum, with average flows to the 8 major U.S. terminals increasing to 15.4 billion cubic feet per day in early July, up from 14.4 in June, as facilities gradually come back online following spring maintenance. Golden Pass LNG has requested U.S. approval to begin re-exporting LNG starting October 1, indicating the facility is nearing startup. This production-demand balance continues to support prices, but cooler-than-average weather forecasts for July 9 through 17 could temporarily reduce demand from the power sector, limiting upside momentum. Meanwhile, bearish pressure on U.S. gas prices is mounting as European natural gas futures fell to an 8-week low of €33 as traders reacted to changing weather patterns and supply conditions. Supply remains steady, supported by consistent Norwegian flows and stable LNG sendouts. Meanwhile, weaker LNG demand from China, driven by a slowing economy and higher U.S. tariffs, has redirected more cargoes to Europe, boosting regional supply and putting downward pressure on prices. From a technical perspective, gas futures are showing a bearish trend, with prices down 2% at $3.40. Key technical indicators like RSI and moving averages suggest selling pressure. The price is below the pivot point of $3.50, with support levels at $3.40 and $3.25. A break below $3.40 could lead to further declines toward $3.25 or $3. Overall, technicals point to continued downside risk in the near term. The next 4 storage reports are expected to be bearish again, but I'm sure the bulls will still manage to come up with some magical reason to keep prices afloat because who needs fundamentals anyway? Please like, subscribe, and comment to support the channel. See you in the next one.